Alright, so yesterday I talked about how to set up TradingView and how to start that up. Today I want to talk about more of the basics, the basic terminologies and the basic things within trading. So I want to start with candles. What are candles? So, oh geez, let me. Candles are. This is a candle. So let's just use this big candle right here. So this candle opened up. So candles open up at the closing price of the last candle, and the closing price was right here of the last candle. So I'll explain that after. But this opened up right at the closing price, pushed up a little bit, created this wick. It's like a snail trail. That's what you want to think of it as, a snail trail. So pushed up, created this wick, and then it got pushed down, and this is where price closed. This is how expensive price closed to, and this is how um, how expensive it was when the price closed, and how low the price was when price closed. This pushed down all the way to here, created a snail trail, and pushed back up a little bit, closed right here. So this next candle opens and it pushes up, created a snail trail right here, tiny wick, then pushed down all the way down here, then pushed back up, and it closed here. This is how expensive it was when it closed, and this is how low the price was when it closed. Um, so that's kind of a little explanation on candles. If you have any more questions, you can put them in the comments. Um, so for indicators, I wanted to talk about indicators. Indicators just help you with your whatever strategy you use. They help you see the market in a different way. So for one, I use this higher time frame power of 3 candle. I'll also explain higher time frame and what that means. So this shows me the daily candle. So you see this shows me the exact candle that this is. So instead of having to switch to the daily to look at the candle, I can just stay at the 5 minute and see how it's rejecting or reacting, or where it's going to close and stuff like that. I also use ICT kill zones and pivots. This shows me every single session. I trade New York sessions, so this is my session that's going through right now. Right now we're about to open to New York lunch, but I traded AM, and yeah, so that's basically indicators. Indicators just help you see the market in a different way. They help you see sessions. They can help you see higher time frame candles. They can help you see averages within the market. They can help you see volume. They can help you see that kind of stuff, like how much pressure buyers have versus how much pressure sellers have, and stuff like that. So yeah, I wanted to go over what day trading actually is too. Day trading is just buying and selling an asset in one day. So it can be 5 to 10 minutes. It could be 30 minutes to an hour. It could be however long you want it to be, but it has to be within one day. That's what's considered day trading. If it goes over one day, that's considered swing trading, and it's basically the same thing but a little bit different. But yeah, so that's trading is pretty simple. Just the gist of it. I could buy right now, expecting it to hit this level, to go up to this level. But yeah, I also want to explain what futures are. So futures are us predicting. It's a prediction of the future price of the index NASDAQ. So we're predicting the future price of NASDAQ. What that means is we're predicting it to be, it's a prediction. Like, we're predicting the price to be higher or lower than what it is. And that's basically what day trading is in general. But yeah, so that's futures. If there's any questions about that, I'm still learning on how to explain things like thoroughly and deeply, with showing that I have good knowledge on it. But yeah, I want to talk about what higher time frames and lower time frames are. These are probably one of the most important things to know within trading. You scale through these every single day when you trade. The higher time frames are used to see confluences, which are different things within your strategy. it's used to see highs and lows in the market, which this is a high right here. This is a high and this is a low. So I'll explain that after this, what bearish and bullish means. But yeah, so higher time frames, all the higher time frames are anything after 5 minutes. So 15-minute higher time frame, 30-minute higher time frame, 1 hour higher time frame, 4 hour higher time frame. The higher you get, the more evidence and context that you have. So say like this candle, this candle's bullish, so overall the day has been going up, or this candle's bearish, and overall the day has been going down. So 1 hour, you can start to see more candles because more candles form within smaller time frames. But yeah, the lower time frames, on the other hand, is where you want to get your entries and your executions. I watch the 5 minute, so I actually watch trades play out in the 5 minute, and then I enter on the 1 minute. I'll explain that in future videos. If you have any questions right now, you can put them in the comments, obviously. But yeah, so that's the higher time frames and lower time frames. You really want to learn those and study those because those are probably one of the most important things that you can know in trading. I'll go over what bearish and bullish are first. So bearish and bullish, bearish means it's a downtrend, while bullish means it's an uptrend. So I'll show you examples of this. Let's see. So this is bearish. We made a lower high right here. We made a lower low. Look, I'll draw it. So bearish means we're making lower highs and lower lows. So this was a lower high. We made a lower low, lower high, another lower low, lower high, and then we kept going. It just keeps going. Lower, lower low, and then it made a higher high, which this would be considered a liquidity sweep, which is what you'll be seeing in future videos. Will be pretty soon, actually, because that's pretty basic. But that's a liquidity sweep, and then it just dumps, makes another lower low, and yeah, that's bearish right there. Lower lows and lower highs. Bullish, on the other hand, is higher highs and lower lows. So let me find you an example here. Right here. So right here, oh crap, wrong one. We made a higher high, higher low, or higher low, yeah, higher high, higher low, higher high, higher low, and then we made a lower high, but then we kept going. We made a lower low, swept out liquidity, and then we made a higher high, lower low, swept out more liquidity, higher high, lower low, and you'll see more. Liquidity is just resting orders in the market, so I'll explain that later on. But yeah, that could have been a better explanation, but I'm trying to find a good example here. Maybe if I go to the 1 minute. Yeah, so basically this is it right here. Let's see. Yeah, right here. Okay, so we made a low low, but then we made a higher high, lower or higher low, higher high, higher low, higher high, higher low, higher high, and then just keeps going on. That's what bullish is. It means we're in an uptrend. We're going up. And then when we're in a downtrend, it's called bearish, and we're going down. So let's see, what else can I explain? Oh, I'll explain to you guys what stop losses and take profits are. That's pretty important. So how about I just do it on the trade that I took today? For some reason I can't find it. Oh, it's not here. It's up here. Okay, so I'll do it on the trade I took today. So we had a sweep, retrace, then we broke structure. I entered. My entry was right there. and I literally got barely stopped out. I had it like this. Yeah. Okay, so this was basically my trade. I entered. This was my entry. This is the exact price that you entered the market at. You bought or sold. In this case, I sold. Um, so what you're going to want to do is you put this in. Stop loss is the price that you want, that you like once um, the candles hit there or price gets to there, you don't want to be in the trade anymore. So this stops your loss. So if you were trading, say no stop loss, it would just keep going and you would literally liquidate your account. Um, this is for risk management. You don't want to risk too much. Um, Stop loss, it helps you have like a point where you don't just keep going and losing money. You hit this and you lose your money, but you don't just keep going and destroy your account, liquidate your account. Take profit, on the other hand, is the level you want to hit to make the money, which mine was right here. I literally got stopped out right here, and then all of a sudden it just went all the way down to my take profit. But I have another video on my account for that I posted today. But yeah, so that's stop loss and take profit. Stop loss is where you want to stop the loss, obviously, and then your take profits where you want to take your profit. It's pretty simple. It's just the level and placing them in the right spots is what's difficult sometimes, which I'll eventually teach you that, and a lot of traders teach you that too. But yeah, let's see. I think that's all. But yeah, alright guys, so that's the video for today. If there's any more questions or anything more you guys want to learn, I can add them to different videos. So sorry about that if I missed something. But yeah, overall, I think I hit everything that I wanted to hit. But if there's anything you guys have questions about, leave them in the comments, and I'll answer them pretty quickly. Alright, peace out.